Taking a look at a daily chart of the S&P 500, we had this huge decline on Thursday that found support around the 1060, 1065 level. That's very key longer-term support that represents the low that we put in during February. We had a closing low for the week on Friday, which held around the 1110 level. Today we are up around the 1150, 1160 level, so we're bouncing hard after getting very oversold. There's a couple pieces of resistance here in the very short term. The 50% retracement of the recent decline comes in around the 1165 level, and a 61.8% retracement of the recent decline comes in around 1177. We think that this rally will be quick, possibly topping out at the most up here at around the 1180 level. That's really the only piece of chart resistance from back in when the market was peaking back in April here. We had prior buying off that 1180 level. So we think at best we could run up to the 1180 level very quickly. Then once that rally runs its course, then we think we could do some backing and filling and possibly some retesting of the recent lows. Whether we come back to Friday's low around the 1110 level, we were actually on an intraday basis below 1100, or we fully retest the Thursday lows back around 1065. Somewhere in this area over the next couple of weeks, we think the S&P will decline into. We think that it'll occur on another increase in bearish sentiment, and we think that the decline will probably be on lesser volume than we saw during extremely high levels of volume on Thursday and Friday. It's interesting to note that between about the 1060, 1065 level and up towards the 1180 level, there seems like there's a real air pocket where prices can move very quickly. We basically went straight up from the February lows within that area. We didn't start having problems until we got up above, we got up to about the 1200 level. And you can see once we broke that 1180 area, because we went straight up through that area, there was no layers of chart support build up, and we just quickly went right through that area. And then with today's pop, there seems to be a real air pocket in there, so we would expect a lot more volatility over the next couple of weeks as the market tries to trace out some type of bottom. After collapses like this, many times the market will attempt to trace out what appears to be a double or a triple bottom. So that's what we'll be looking for. The big question on everybody's mind is last week's weakness. Will that lead to the start, or was it the start of a new bear market? We don't think so. We've been calling for a 10 to 15% correction, and we're going to stick with that at this point.